Well, it's a solid day for markets and welcome to India Market Close. Good afternoon. I'm Hersh. Sayta. With me is Mahima, Vachhrajani, and we're going to take you through over the next hour or so how markets are closing. 0.4% higher. We're above the 24,400 mark where the Nifty 50 is concerned. The Nifty Bank as well, but slightly more milder in terms of the green on the Nifty Bank. But 52,500, well above that is what we're currently seeing, 100 point plus. Even on the Nifty Bank. So good solid cues overall. Let's pull up the heat map, see what's really buzzing. Essentially the stock of the day, auto as well as FMCG. Those are largely the sectors which are keeping the markets abuzz. 6.5% on Maruti Suzuki. M&M also up 3+%. But you're looking at a pack of FMCG counters which are doing extremely well in trade as well. So an ITC, Britannia, Titan, and you have some pharma as well. So auto, mostly FMCG and auto really leading the pack. In terms of the losers, you will see some amount of PSU along with IT and Reliance, along with banks also, private sector especially, which are trading mildly in the red. Nothing meaningful or significant, but mildly in the red nonetheless. And that's clearly the texture and the flavor. Let's pull up the sectoral heat map as well to try and see which sectors, and that's exactly what's playing out. PSU banks are doing extremely well in trade. You have something like an SBI up 1+%, 1.5% in trade as well. So you're seeing some good pocket there. But auto and consumption is really the story of the day, along with pharma. Pharma also up 1% or so. FMCG also doing fairly well. In terms of the losers, far and few, but nonetheless, IT as well as energy and PSU basket in the red. So that's where we are seeing. But for broader markets, Mahima, talk to us about where the mid and the small cap indices are currently at and some specific names which are buzzing.
Absolutely, Hersh. Quickly, if we can pull up the mid cap 150 and small cap 250. Well, in terms of the broader markets, the mid cap 100 is up around 0.17% and small cap mid cap 150 is up around 1.1%, and small cap 250 is up around 0.3%. So pretty much flattish, we can say. But let's quickly move to stock specific actions. You know, in terms of rice stocks, it's been the talk of the day today. The rice stocks have been buzzing in trade today after a Bloomberg story which suggested that India is mulling over ease of rice exports. The government may allow white rice exports on a fixed duty, and 20% levy on shipments might be scrapped for parboiled rice. And media reports also suggest that for non-basmati rice, the floor price will be set at around $500 per ton. And because of all these news, a lot of rice stocks are buzzing in trade today. KRBL is up around 7%. LT Foods is up around 7%. Chamanlal Sayta is also up around 10.26%. Quickly, if we can also pull up GRM Overseas Limited, that stock too is buzzing in trade on the back of the same news, up around 4%. Let's also talk about Maruti Suzuki. You know, the UP hybrid tax cut. The UP government has waived registration tax on hybrid vehicles, and this could potentially benefit stocks like Maruti Suzuki, and the stock is buzzing because following this, a lot of other states might also consider the same. Maruti Suzuki, the stock is up around 6.5% as we speak. Let's also talk about FL India. There was a Citi note today on FL India, and they've initiated buy rating with a target price of 1600, which suggests an almost 20% upside for the stock. The stock is doing well, has done well in trade today since morning. It's up around 3% as we speak. It's basically an edtech platform that will benefit from new online customer acquisition spending and so on. They expect a 20% top line CAGR over FY24 to 27 and a 400 basis points margin expansion for AFL India. Let's also quickly pull up Vijaya Diagnostic. There was a large trade in this particular stock, and there was around 2.2% of equity that exchanged hands. Around 2.24 million shares were exchanged. The stock is up around 2.4%. Let's also quickly pull up Tata Motors. What's Tata Motors doing in trade? It's revised its starting prices for SUV Harrier and Safari, and this could benefit around 1.4 lakh of SUV variants. The stock is not doing much, however, it's up around 1%. Let's lastly pull up Exide as well before I move on to the guests for the day. Sources on Bloomberg suggest that, Exide is eyeing naval battery tenders in Algeria and Russia. And this could be a big thing for the company. And this is an aggressive strategy to enter into the naval battery space, which is usually used in submarines. The stock is up around 0.6% in trade. But, let's move on to our guests for the day. We're joined by Khush Bora of khushbora.com and Dharmesh Kant from Chola Securities, who joins us on the closing show today. Welcome to the show, gentlemen. Khush, I'll start with you first. How is Exide looking on the charts for you?
Hi, first up, a very good afternoon. Exide is a little exciting, on the chart. It's had a fair share of run. The consolidation also that we are seeing is with a fair degree of positive bias. We've seen a lot of traction in, this entire space. I think this is a good base formation that the stock is attempting at, the current levels. I think it's ready for, the next leg of up move, which can take it closer to 600, perhaps even a 615 kind of level. So if anyone is not yet, participated in the Exide move, I think this is a good level to get into. A very clear stop loss comes in at 560 to 565 kind of a range. So this is where you should perhaps, place your positional stop loss and wait for moves up until 595 and 615.
Kush, just your views with regard to indices. Where are we? The Nifty Bank in a bit of consolidation mode. What's your sense with regard to what levels one can look for going forward, both on the Nifty 50 and the Nifty Bank?
Sure. Hi, Hersh. Since yesterday, I've been maintaining that the 50 to 200 mark is a very crucial one for the Bank Nifty. In fact, we were a little bullish on the Bank Nifty yesterday as well. So, and we did see an up move on the Bank Nifty, during the day. I think that view is still intact. As long as 52,000, 50 to 200 is held, you should consider a long position on the Bank Nifty, very tight stop loss. We've seen the likes of SBI and, primarily HDFC Bank dragging the index lower, but both these stocks taking some sort of support. Even if they stem the fall, I think, the likes of ICICI Axis will perhaps jump in and, you could see some sort of an up move on the Bank Nifty closer to 53,300 and perhaps a 53,800 kind of levels also. So Bank Nifty with a tight stop loss, you could consider a long position. Nifty, we've seen incremental gains. We are at an all-time high today, but not by a big margin. So the move is just incremental. How I would play Nifty is if I have an existing position, I will continue to ride this. The next level to watch for on Nifty is 24,650. And here the stop loss comes in at 24,200.
Sure. Thanks so much for that, Coach. Dharmesh, let me come to you on a couple of factors just with regard to how the markets are moving. We're seeing good strength, especially when it comes to the benchmarks. What do you make of this? There is deep FI interest which continues to come in. We are seeing good FI flows, DIs. Today we saw the SIP numbers come in again, 21,000 plus crore. Do you believe that valuations to a certain extent are being ignored?
Yeah, good afternoon, Hersh. I mean, this market is all about liquidity now. So be it FII, DII, or retail investors through the mutual fund route, they are pumping in huge money, and it's getting polarized. So valuations definitely on the overall market is plus one standard deviation for mean multiples, whichever segment you look at, be it large cap, mid cap, small and micro cap. Everywhere is the same story. And the difficult part of this market is this year won't be an operating margin play. So operating margin benefits is already done and dusted with. This time you are going to have some headwinds out there. Top line growth was again missing. We have had a look at most of the business updates which was there, and particularly the FMCG basket and all. It's still in low single digit kind of a top line growth. Banking for the FSI segment, public sector is again languishing around 10% kind of under credit growth. Private sector did a bit better, around 17-18% kind of growth. But the type of valuation multiples which most of these companies are enjoying is definitely, above the radar. But as long as liquidity keeps on coming in, there is no stoppage, because essentially what is happening, Hersh, is there is no seller in the market. So whether it is domestic institution or FIIs or retail, they all are buyers in the market. So I mean, the demand is far too high than the supply of the free float shares in the market, and that is what is driving the market up. So we are stepping into a scary zone now on the back of this liquidity flows, which is driving the market up.
Got it, Dharmesh. Kush, coming back to you, considering the way markets are moving today, what are your top picks for this afternoon?
Well, the two sectors that are doing well today are FMCG and auto. So incidentally, my picks are also from the same space. Colgate Palmolive, this stock, if you remember, we've had a discussion, a couple of times, even in the studios, I've mentioned that, a couple of stocks that I like in the FMCG space, Colgate Palmolive actually topped that list, continues to do well. I think from a near-term perspective, we are looking at a 3090, 3150 kind of an up move. 2950 is a strong support zone. So, perhaps closer to that is where you can place your stop loss. From the auto space, more like the auto ancillary space, we've got JBM Auto. This stock's had its fair share of volatility, but if you see the last couple of sessions, there's been a very clear volume-led breakout above that 20 to 50 mark. So from here on, you could expect a move until 2330, 2400. I think the stock's already made a move closer to the 2330 target since the start of the show. So perhaps someone can get in for the second target of 2400, and a good support zone comes in at 2220. I'm sorry.
Okay, so Colgate Palmolive and JBM Auto are the top picks for the day. But the big story of the day is Maruti Suzuki. The stock rose over 7% as UP waives off registration fee on hybrid vehicles. Well, will more states follow this? Puneet has the details on this. Puneet, take it away.
Yeah, thanks for that. So it's a very key move that is coming from the UP government, waiving of the registration tax. Now, this is monumental for hybrid tax, especially because the space has been waiting for at least any kind of move to support the demand going forward. Do know that the current tax regime are 43% for hybrid cars versus just 5% for EVs, and on a comparable basis, roughly 28% for petrol and diesel cars. Now, effectively with this, beneficiaries would be, of course, Maruti Suzuki, Toyota, as well as Honda, who all have hybrid cars launched already in the market. Currently, the tax regime, what the UP government has is roughly 10% tax on cars which are priced about 10 lakhs for hybrid vehicles. Effectively, when you look at Maruti Suzuki, the Grand Vitara which they have, which is available in the hybrid, price between 18 to 20 lakhs. The tax for this particular, under the particular tax regime was roughly 1.8 to 2 lakh rupees. Now, this will be 100% waived off or refunded in some cases for the car makers who already purchased. And this is a very key move because it reduces the gap of the price of the car of a hybrid when compared to a petrol. Earlier, the gap was roughly between 3 to 4 lakhs, and now the benefit of 2 lakhs will be key beneficiaries for owners buying hybrid cars in this particular way. Now, when you look at the FY24 number for Maruti Suzuki, roughly 9 to 10% of its total sales comes from the hybrid/petrol variants of cars such as the Grand Vitara as well as the Invicto, which is priced around 24 to 25 lakhs. And when you look at the other states that will be key beneficiaries or currently which have the highest selling of hybrid cars, is Maharashtra is the top one, with roughly 35,000 cars sold which were hybrid in the previous year. The second one is, of course, Karnataka with 30,000, and Uttar Pradesh is at number 3 with 27,000. So going forward, it will be very key on what could potentially translate into gains from this particular segment, and if other states do follow as well. Back to you.
Well, thanks so much for that, Puneet. Well, Auto on a tear. We also spoke with the chairman of Maruti Suzuki, RC Bhargav, in an exclusive conversation on what this move means for the company. We have Tamanna speaking with him. Listen into a slice of that.
The basic question which we have to look at is that everybody in the country wants two things. One is that the pollution level, the greenhouse gases which create the global warming should be reduced, and we should meet our zero carbon credit. The second is that our dependence on foreign imported oil must be ended or at least minimized to the extent possible. And the policy of electric vehicles was brought in for both these objectives. But it has been realized that while electric vehicles are gradually getting into the customer's buying package, there are large amount of ICE, petrol and diesel vehicles which are being bought also. And they continue to pollute and they continue to consume oil. So if we want to achieve the objectives of reducing pollution and greenhouse gases and use of petrol, we must use other technologies in addition to electric vehicles to bring down the pollution from pure ICE vehicles. And the use of hybrid vehicles, the use of CNG, the use of biofuels are all means to do that. So I think the UP government has been, very proactive, very smart, and I think very commendable that they have realized that if the country is going to achieve its objectives of 70 and before that reducing imports, then it is necessary to encourage technologies other than only electric cars, because electric cars alone will not do the job. And that is the outcome of that realization is this policy.
Well, interesting takeaways there from Mr. R.C. Bhargava. Dharmesh, I'll come to you on, auto and, the entire auto space, including auto anks. Where do you see value at present, considering the June auto sales that came in, plus, with Q1 FY24 kicking in? What are your top picks in this space?
Yeah, I mean, very hard to find value at the current valuation multiples, but I think two companies does stand out. One is Tata Motors. With the, whenever the demerger happens, maybe in a year's time from now, SOTP-based valuation is around 1350 to 1400 crores, 1400 rupees per share for Tata Motors. So that is one space where I do think after the split, it will be a more focused, verticalized kind of a business model, and which should work well and offer well for the Tata Motors. And the other is M&M. So M&M, if you look at it, SUV segment was doing pretty well, and farm equipment is now likely to kick in with the monsoons catching up with the rest of India. So this was a concern, but as this concern is slowly getting laid to rest, this pocket again enters a good, expansion territory. So these two companies still looks attractive to me. But others like Maruti or Hero MotoCorp, Bajaj Auto, TVS, Eicher, I think they have run. This is mostly a last leg of a rally or one trade pop-up going out there. Structurally, I think there should be some time correction happening into these companies, maybe for 3 to 6 months, as operating margins, when they announce the results, will be under pressure going forward. So that will have some takeaway from the stock prices, which have climbed so high. But yes, M&M and Tata Motors are the two value buy on the OEM part.
Got it. And Dharmesh, just with regard to the opportunity which this presents, this new development with regard to what the UP government has done, how large is it in your view? If you can just quickly give us that view.
Not very large. I mean, 1.5 to 2% is what the size of the average market is. So it's just a trade. I mean, Hersh, a few states may follow, but I don't think this is going to dent the needle meaningfully on the volume of take as far as that is concerned.
And Kush, just with regard to technical, 7% high on Maruti, what should one do? How should one make a trade now on this one?
Well, certainly not initiate a fresh one. Continue holding whatever positions you may have, because this breakout has come after a long period of consolidation, and that too with a negative bias. So at the moment, I think 13,200 will start acting as a resistance. And also, if you see the call options, they have a fair bit of OI at the 13,000 mark, plus you add the premium of 200, 250 odd rupees. So the resistance levels do play in at 13,000, 13,200 level. So ride the wave, whatever momentum the stocks got up until those levels, but do not initiate a fresh position, at this juncture.
M&M, if any view at all, Kush?
Well, M&M, we've, again, been fairly constructive on it, did give that spurt, but, it now seems to be consolidating around that, 20 DMA mark. So I think this will continue to be, the range for M&M, where 2850 on the downside and perhaps 3000 on the upside will remain the range. The momentum has also fizzled out, volumes also thinning. So I think this is perhaps a range-bound play. A positional bet can be taken here, but from a momentum perspective, I'd perhaps stay away for now.
Okay, thanks so much for your views. Please stay on, gentlemen. We'll slip into a very short break. On the other side, we'll discuss the June AMFI numbers and more market action. Stay tuned to NDTV Profit.
Welcome back. You're watching India Market Close. Now, taking a slight diversion to AMFI data, which came out a little while ago, inflows into equity mutual funds surged to a fresh record high in June, led by a rise in the inflows of multi-cap and thematic funds. We have Alex, who joins us now to break down the numbers for us. Alex, what do you have?
Well, it's a month, another month of records, I should say, because there are several to talk about. One you've already mentioned, you've spoken about the inflows into actively managed equity schemes, which stood at over 40,600 crore rupees. That is a record. The inflows into sectoral and thematic funds within that bucket has stood at over 22,350 crore rupees. That is also a fresh record. And I'm looking at the SIP number. The gross SIP inflows into mutual funds as a whole has stood at 21,262 crore rupees in the month of June, and that is the third record that I know of as of now. And that compares with 20,904 crore rupees for the month of May. So let's get into some of these numbers. I spoke about the thematic funds, which stood at 22,000 odd crore, and that is because there were a large number of new fund offers that were introduced in the month gone by. As many as 9 of the new fund offers, which stood at 11, were thematic funds, and they were responsible for inflows of as much as 14,370 crore rupees, which is quite substantial. And there are a whole host of mutual fund schemes that were launched during the month gone by. Now, there was an outflow overall for the industry of about 40,000 crore rupees, and that was because at the end of the quarter, which June was, you generally see an outflow from fixed income mutual fund schemes. That outflow in the month of June stood at 1.07 lakh crore rupees. A bulk of those outflows coming in the shorter duration funds, and particularly in liquid funds, which saw an outflow of 80,000 crore rupees. Hybrid funds saw a reasonably good inflow, and so did index funds. Index funds and passive funds as a whole have been seeing quite interesting inflows. Index funds got inflows of over 5,000 crore rupees, and other ETFs, which also include equity ETFs, saw inflows of 9,000 crore rupees in the month gone by. All told, it's a very strong set of numbers, and seemingly the retail interest in investing in mutual funds hasn't gone anywhere.
Absolutely, Alex. Retail interest hasn't gone anywhere. Thanks for that. Let me take it across to you, Kush, because we had Dharmesh talk about flows being extremely strong. Also, he was in some way hunting for value. He's indicated that as well. Kush, just with regard to the nature of the flows, they've been extremely strong and they continue to be robust. Are you therefore more constructive when it comes to charts and flows? Give us some context with regard to how one should look at this from a flow and a chart perspective.
So, Hersh, in fact, for the last 3 weeks, I've maintained that, we are in an overbought territory, at least when it comes to Nifty and the indices. The only thing that explains, why we are still going higher from there and getting stretched into those overheated territories is, as Dharmesh rightly pointed out and as Alex very clearly, just laid out for us, is the liquidity. It's a bit of a concern because, the sooner we realize, or the markets realize that, this is a liquidity-driven rally, there is perhaps, some let-off that should come about. If it doesn't happen anytime soon, then the higher they go, the harder they fall. That kind of a rule might apply. I don't want to sound, bearish or pessimistic. It's just a word of caution because, we are into overheated territories. We've been discussing, various sectors. Let's not even begin with the likes of defense and railways. Those are stocks that we can't even perhaps recommend. Discussion is fine because we know they are so stretched right now. When the index itself hits an RSI of 80 is where you get a little cautious. So while these numbers are extremely encouraging in the long run, a lot of comfort comes from this, that the fall, if and when it comes, could perhaps be shallow, and the recovery could be very fast, V-shaped the way we've seen in the month of June. Just from the near term, it just makes it makes us a little uncomfortable because it's just liquidity that is driving the index and a lot of pockets in the market right now.
Got it, Kush. I'll shift focus to rice stocks because it's not been one stock that has been the stock of the day today. It's a bunch of rice stocks that have been stocks of the day. This is on the back of a Bloomberg story which suggested that India mulls easing of rice export limits, and what they've said is that the government may allow white rice exports with a fixed duty. They've also said that a 20% levy on shipments on parboiled rice may be scrapped as well. Media sources have also suggested that the center is likely to fix floor price at $500 per ton for non-basmati rice. Now, a couple of stocks that are buzzing on the back of this. The first one is LT Foods. LT Foods had reported a sales growth of around 17% only for the rice segment itself. It also plans a capex of around 200 crores to expand its capacity, and the company is extremely optimistic about achieving double-digit growth in the international markets going forward. The stock from an year perspective has been up around 118%. The next stock is KRBL, which is a key player in the basmati rice exports, and it caters to markets like Iran, Iraq, and Saudi Arabia. The stock, as compared to LT Foods, KRBL stock has been under pressure. 1 year it's been down around 4%. However, today the stock has seen a significant up move. It's been up around 7.4%. In terms of the next stock, which is Chamandal Sayta Exports, the exports for this particular company comprises of almost 89% of total revenues. Now, in terms of their volumes have increased by 4% in FY24. However, their export sales have taken a hit. They've declined by 1% in FY24. And in terms of stock performance, the stock has been up around 40% on a year basis. Lastly, GRM Overseas Limited, in terms of how the company has performed, the revenue was down around 5% in FY25, its share in exports was around 76% in FY23. We are yet to receive FY24 data. And lastly, in terms of stock performance, it's been up around 25.6%, overall basis. But talking about these rice stocks, Dharmesh, I'll come to you. In terms of valuations, they're trailing P ranges between 10 to 20 times. So what are your views in terms of valuations for these companies?
See, normally any agri theme you play with, particularly the agri producers, the PEs are like this only 8, 10, 7, because they are cyclical in nature and very hard to predict upon the product or the inventory level which they are sitting on. And the consumption, the demand rises around 1.5%. So that's the overall global demand scenario which is shaping up for most of these agri producers. So having that in regard, it's now at mean levels of PE multiple where they are trading as of now. Just because now we are used to PE multiples which is in excess of say 50, 60, 70 kind of trailing PE. If you look at say defense or railway company, then these PE multiple looks very cheap and value-wise. Having said that, 3 months back, we did initiate, as a trade, buy on all these 3 companies, KRBL, LT Foods, and Chamandal Sayta. And the idea was the same. I mean, that time the PEs were more suppressed than where they are right now. At the same time, ROEs were intact. And they were getting business from the Middle East in a decent way. Even Europe and US was finding some traction. So as a basket buy, we have initiated that. Larger part of the move is done through, but I do expect going from here to 3 months down the season till Diwali time, the traction would be there in rice companies. If rainfall is the way it has started spreading, if it continues to do so, then around 15-17% kind of an upside is still due for most of these companies, where it would be lower at 1 plus 1 standard deviation to the mean multiple. So that is the window which is still left for these companies. So we are sticking with our recommendation. We have not recommended any profit taking on all 3 of them. We have suggested to hold to our clients. And it's just a play, it's a trade for next 15-17% more on that. Structurally, it has always been a cyclical trade.
Got it. So no profit taking on these stocks you can probably hold is what you're saying. Kush, I'll quickly come to you. Any of these stocks looking good on the charts despite of the up move that all of these have seen today?
Equally quickly, let me also add that I saw your Anushi's and Agam's discussion on this. I found it personally very interesting and very engaging. Based on the list that you've shared, the only 2 stocks that I like from this space are the ones that were already doing well before this move came about, which is LT Foods and GRM Overseas. If one were to initiate a fresh position for LT Foods, the stop loss will be 260, and for GRM Overseas, the stop loss will be 200. The recent highs that these stocks have made, should act as your targets. They've already come off sharply from those. These 2 stocks still look a little interesting on the chart.
Understood. So LT Foods and GRM Overseas is where the charts are looking attractive. But with that, let's take a quick break on the other side.
Sorry, Mahima, for interjecting. We've got Sensex, which has just hit a record high. So we're 0.5% higher, 80,360 is where we are at, where the Sensex is concerned. Yes, we've clocked in another all-time high. Not sure if that surprises anyone at the moment, but nonetheless, just to mark that out, we'll slip into a very short break. On the other side, we'll of course offer the top buy-sell recommendations which Kush may have, as well as the latest with regard to derivative markets. What are those cues indicating? Stay tuned. Welcome back. Thanks for staying with us on India Market Close. I have Agam standing by as always. We're a bit late, but to break down the FNO cues for today, Agam, what's the FNO data really indicating? Talk to us.
Well, Harsh, as long as it's not 3:30, we're not late. We're just in time to make that last trade right now. But it's been a quiet afternoon. Sure enough, yes, we have made new life highs for the Nifty, and even as it advances by about 0.5%. But at the moment, we are not seeing as much traction. As far as the open interest change is concerned, about 3.5% added in OI. In terms of the Bank Nifty as well, we're looking at unwinding to the tune of around 1.5%. The Bank Nifty, of course, the positive is that it's climbed above the mark of 52,500. As we move into the next few days, we're keeping an eye on the Nifty levels. We are still working with a level of about roughly around 800 points. We're demarcated by 24,000 on the lower end, a little stronger there with the kind of open interest that we've seen at 24,000 puts. But we are now starting to see a significant amount of writing around the 24,300, 400 puts as well. And of course, on the higher end, unwinding as far as the 24,500 call is concerned. So a little bit more strength back into the Nifty at the moment. Of course, the Fin Nifty expiry, we did have that. This seemed like it's going to close around 23,650 and thereabout. And moving on to stocks, so well, again, plenty more traction when it comes to Grasim, Balrampur Chini, United Spirits on the upside. And among stocks which are seeing unwinding, we did see short covering in Hindustan Copper, Eicher Motors, as well as HDFC Life to a certain extent. A little bit of weakness in Reliance Industries, but not much to talk about in general. Overall, a steady market. And of course, the good news is that the Nifty continues its journey into uncharted territory.
Right, Agam, thank you so much for breaking that down for us. But moving on, sources told NDTV Profit that SBI is open to selling most of its stake in Yes Bank 4 years since it rescued the lender. Let's get in our colleague Vishwanath for more details.
So State Bank of India is at this point in time keen on offloading its entire stake. It owns about 23.99% in Yes Bank. So they want to at least get off a majority of that stake off to potential buyers. And this is a decision that is being taken about 4 years since the bank had originally invested in Yes Bank as part of a rescue operation that was mounted by the Reserve Bank of India. Now remember that for SBI, this will be a test of its original investment to see whether this rescue plan that had been concocted with the Reserve Bank of India has actually resulted in any potential results in Yes Bank, whether the value of that investment has actually gone down, and whether that is something worth pushing for. That kind of a rescue style is worth pushing for. State Bank of India, on its part, is firm that they currently do not have any bidder who can be considered as a potential to sell the stake to. What SBI is also believing is that once the Reserve Bank of India gives its fit and proper approval to any likely bidder, that's when SBI will sign off on this deal, and that's when this transaction is likely to happen. Remember that for any stake by more than 10% in a private bank, the bidder has to take the RBI's approval and a fit and proper approval before they can actually participate in that transaction.
Well, SBI as well as Yes Bank buzzing today. Of course, Yes Bank up 0.5%, not much, but we're probably at the day's low where both of those are concerned. Okay, SBI maybe just off those days lows, but definitely you're seeing some amount of bullishness on both of those counters. We also had the chance to speak to Bernstein senior analyst Pranav Gundlapalli, who believes that there may be further upside for SBI, provided that they can divest from some of their subsidiaries, including something like a Yes Bank, which is not exactly a subsidiary, but divestments is what he was suggesting could unlock some bit of value in an otherwise pretty much well-valued bank. Listen into his views.
I think SBI looks well positioned. I think both from a corporate credit perspective, we do think they can capture a larger share, just given their balance sheet size and relatively better liquidity position. Having said that, most of that is largely priced in. The upside for an SBI would come if they manage to, for example, divest some of their subsidiaries, including their stake in Yes Bank. Those would be some of the upside catalysts that can drive the stock further up. But otherwise, most of the other factors are largely priced in today. So the healthy compounding will continue, but will there be a multiple re-rating? I think the answer for that will largely come from any unlocking of value from the subsidiary sales.
All right, so plenty happening in the banking space as always, but let me first off welcome on board Aditya Agarwala from Invest4Edu. Aditya, you've come on a day when Sensex has again hit its record high. We took views from Kush, of course, on the technical side with regard to the benchmark. But give us your views. What's your sense currently? Is this the start of, possibly more fresh highs going forward?
Hi, good afternoon. Thanks for coming to the show. We are hitting new highs every day, and it's record highs every single day. The moment you have a few hundred basis points on the up move, both on the Nifty and the Sensex, we hit a new high. And then we are heading into an uncharted territory on every week. I think the upside will not be a very smooth one from here on. And we are seeing that you hit about 100, 150 point on the Nifty, a new high, and then you again end into consolidation phase. So clearly 24,400 was a hurdle for so many days. Now that it's crossed it, I think 24,500 is the next level for me that I'm eyeing for. If somebody's looking for a fresh long positions, yes, above 24,400 with a stop loss at 24,300, 200, you can look for a fresh long position in Nifty and look for a target of 24,500 about 24,600. That's about it. I don't think you will see a 500 point or 1,000 point rally on the Nifty straight away. Look at the broader markets. That is where actual pain lies. And until the time you have a broad-based participation, that is where you actually see problems. It's very stock-specific and very sector-specific market that we are seeing. Right now, it's the FMCG and the pharmas ruling the world. Last week, it was the IT. So it's more of a sector play that we are seeing, and I think that is likely to continue till the time the budgets are out. And you will see a fertilizer, pharma, all of this space showing more strength as we go ahead.
And Aditya, just with regard to Nifty Auto, you've seen a vast outperformance of the Nifty Auto versus Maruti Suzuki, which is now playing catch up at least today, 7% higher. Not sure the last time when have I seen Maruti up 7%. What's your sense with regard to the auto pack as well as Maruti and M&M in particular, because they are flying away in trade?
Yes, I think so. It's time autos will also make a comeback. They've been underperforming for some time now. I think Maruti has started that rally, and that will trickle down to, I believe, a Mahindra and a Tata Motors as well. In the two-wheeler space, maybe a TVS Motor is something that can be looked at. So Maruti Suzuki on the upside, 13,100 has been acting as a major hurdle. It's tried on a couple of occasions to cross that level. It has not been able to do so. So that is one level that one needs to eye for maybe in trade tomorrow. And on Thursday, if 13,100 is taken out, I think you can see levels of 13,500 as well. A very strong build-up on volumes on Maruti Suzuki. I will still hold my long positions if I've taken long positions in trade today, and maybe just carry it forward for tomorrow and day after and see how the stock performs. Talking of Mahindra and Tata Motors, I think Tata Motors will have a good up move from here on. If anything, between Tata Motors and Mahindra, I think I will play a Tata Motors. And on the upside, I think 1,050 is something that I'm eyeing for on Tata Motors immediately. That is taken out. Maybe 1,100 can also be seen with a good support on the downside at 1960, 1950. If somebody is missed out on going long on Maruti and somebody is looking for a fresh auto name, maybe Tata Motors is one that one should clearly look for and look for a fresh long positions in Tata Motors. As far as Mahindra is concerned, there is an upside, but I would not be too much of in a hurry to go long in Mahindra.
Got it. And Aditya, we're nearing day's end when it comes to trading. Your top picks for tomorrow, if you can give us some color on that.
So clearly FMCG is doing phenomenally well, and I think so this up move that we're seeing in the FMCG space is likely to continue. So the first stock on my radar is from the FMCG space. It's a large cap Britannia Industries. I think there is much more room left on the upside. So 6,000 on the upside is my target. One should look at fresh long positions in Britannia. Could be a BTST, could be a positional play as well, because I've got a slightly longer term and a larger target here. With a stop loss at 5,500, 6,000 is my target. I would recommend a long trade. The second stock is KNR Construction. A very interesting looking chart setup after a good up move. Stock went into a consolidation phase. Volumes declined, and in trade today, it's broken out from that downward sloping channel on extremely healthy volumes. So classical breakout on healthy volumes. I think this up move is likely to continue in trade tomorrow and day after for a target of 400, 450 on KNR Construction. I will initiate fresh long positions with a stop loss at 350 on the downside.
All right, so those are some of Aditya's picks, but we have also got updates, especially from the healthcare space. Maybe if we can pull up a Metropolis, not doing much, but Vijaya Diagnostic doing surprisingly well in trade today on the back of good volumes, 4.3% higher. So maybe some of these diagnostic counters in focus. Kush, what do you make of this? Metropolis also up around 1/3% or so, but pharma is doing fairly well over this week at least. Kush?
Oh, absolutely. And, start of this week, we had, some of these names like Glenmark and Granules, that we had suggested on the channel. They have also done, fairly well. In fact, in the last hour or so, Hersh, if you see, the two indices that have actually spiked are the healthcare and the realty space. Now, obviously, some of these have, a concentration effect dragged higher by just a couple of names. But nonetheless, we've seen a good traction in the healthcare space at least. One stock that's catching my attention, perhaps can be considered as a BTSC trade as well from this space is, Alchem Labs. Now, there was a fair degree of consolidation. Last 3-4 sessions, the stock's actually done rather well. And there's a very clear breakout of a rounding bottom formation here. You could look at a target of 44.50, perhaps even a 5,500 plus kind of levels in the near term. Stop loss comes in at 52.75. So the stock's given a breakout, and the closing hour of a trade, if the stock gives you this kind of momentum, perhaps it could carry through the next day as well. So Alchem Labs is something that I will keep on my radar from this space.
Absolutely, and there has been a good up move in the stock already on the charts, Kush. And but with that, let's shift focus to the IT space. With earnings right around the corner, the focus shifts to the key monitorables from the IT space, and we have Rucha joining us with Bernstein's view on the Indian IT services. Rucha, take it away.
Thank you, Mahima. So Bernstein has initiated on 4 ER&D companies, and it believes that the engineering services is set to grow faster than the IT services space. Now, the 4 companies on my list are Persistent Systems. Now, the brokerage house has initiated an outperform rating on the company with an upside of around 24%. Now, Persistent Systems is a company which is specializing in the software services, and it works with clients like Microsoft and Salesforce. Next is KPIT. Now, the brokerage house has initiated with an outperform rating on the stock with an upside again of 25%. Now, KPIT serves large original equipment manufacturers, also called as OEMs, and tiers like BMW, GM, and Cummins. Now, KPIT has become a dominant player in this field since its IPO in April 2019. Now, Tata Elxsi is another stock, but the brokerage house is bearish on this stock and has initiated with an underperform rating with a downside of more than 14%. Now, Tata Elxsi has delivered just around 17% CAGR over the last 5 years and is the slowest growing company amongst its engineering peers. The top 5 clients account for 44% of the overall revenue. Now, this possesses a key risk to the company going ahead. Also, the stock is expensive at 50 times PE with slowing growth momentum is what the brokerage house believes. Lastly, on Coforge, the company has a kind of neutral view on the stock and has initiated with a market perform rating with a target price of 6080, implying an upside of just around 4%. So these are the 4 companies which the brokerage house has initiated on today.
Right. Thank you so much, Rucha, for breaking that down for us. Dharmesh, I'll come to you, with results around the corner and IT being one of the first sectors which will release its result. What are your views on how Q1 FY25 will shape up for a lot of IT companies? And what is the kind of commentary that you're expecting from these companies?
We have to bifurcate between the two, large caps and mid caps. So as far as large caps are concerned, the best thing would be they should not surprise the market with again downward revision of the guidance. So as long as they are maintaining what they have earlier guided for, should work well for them. At least that will keep the bottom in place, as has been the case with Accenture when they revised their downward guidance by 50 basis point on the higher side. So that is what the expectation is. All IT companies, be it Infosys, TCS, SCL Tech, should follow the suit. If it is so, then definitely this momentum which has picked up in most of these companies that are trading by can translate into an investment buy for 2 to 3 years perspective, expecting that the second half would be a better one where the discretionary spends, post the US elections are through, will start trickling in. But as far as mid caps are concerned, they also delivered, good set of numbers. Even last quarter, Q4 was good for them. Unfortunately, the stock prices took the beating in most of the cases. But KPIT, Persistence, Gensa Technology, Birlasoft, they all had a decent set of numbers, and I think they are likely to carry on with their good growth trajectory, 25% plus kind of a top line growth with healthy EBIT margins, and bottom line around 30% with operating leverage kicking into way. So these are basically, if you look at mid-cap companies, they are, segment specific into the IT space, and most of them are into specific segments. For example, Cyient DLM has a specific job. Birlasoft is again more driven by IT enablers, AI enablers. Then KPIT Technology is more to do with automobile automation and the technology surrounding that platform. So these companies, which is more of a product driven rather than a software driven kind of a platform, are likely to find traction. So we are fairly, bullish on mid-cap IT companies. As far as large caps are concerned, we'll wait for the management commentary and we will jump into the basket post the results are there, subject to it being to our liking.
Okay, Dharmesh, thanks for those views. The Nifty FMCG just slipped below the 1% mark, but nonetheless is doing fairly well in trade. Aditya, your views with regard to the FMCG pack, this one has suddenly come to the fore into focus, and everyone's talking about FMCG.
Harsh, I think this is likely to continue, and till budget, we are going to see this up move in the FMCG. Most of the stocks, you take a look at the mid cap stocks or the large cap ones, all of them will look extremely bullish on the chart setup, and I think this is likely to continue. And if we can increase the horizon of FMCG to maybe spirits and sugar, I think all of them are looking extremely healthy on the charts. Dabur is something which I think can be looked at from the FMCG space. Britannia I already recommended. So Dabur is something which looks interesting to me for a target of 660, 670 on the upside. On the downside, 620 is a very good support area for Dabur. So I think this is one stock which one should look at. Apart from that, GM Breweries and United Spirits both are looking very good on the chart setup. GM Brewery is maybe somewhere around 990,000 looks a decent target for the stock, and United Spirits also looks very interesting after a good support at the trend line. Stock has resumed its uptrend, and I think so it's likely to continue its up move as well. So this entire space is looking interesting, and I think it's likely to continue the up move that we are seeing in trade today, and maybe yesterday also we saw.
Right, Aditya. So, about Dabur India, it also came out with its business update yesterday, and the growth looks good. They've also said that, they're expecting uptick in their margins as well, gross margins as well. So, but, Dharmesh, I'll come to you since, Aditya mentioned about the budget. What is the kind of stocks that you will be eyeing just before the budget? What will your top buys be?
I mean, they all are now above the sky, to say the least, because we rolled out with our budget theme just after the elections results were announced. That was on 6th or 7th of June. And the stocks in the basket were RVNL, Ircon, Textile, HL, DCX System, SBI, ICICI Bank, LIC, GICRE, and GMDC. So the entire basket is up now 20%. And I think most part of the heavy lifting of the bulk lifting has been done for most of these companies. However, two sectors which I do find interesting with budget perspective and where the move has not happened to that extent. One is the garmenting business on the textile front. Ministers have been, vocal about doubling the revenue from that segment. And the second one is the chemical segment. So chemicals, it more largely depends on the European side of the business, how it is going to pick up. But the commentaries have started trickling in where, positive outlook is being expected. And this sector has been beaten down and just started moving up. So these are the two sectors. If something can come through budget, maybe in the form of GST rate or something like that, though GST nowadays is mostly outside the budget, but I'm expecting some incentives to come through. So these two sectors are now on the radar.
All right. Thank you so much, Dharmesh. Also, thank you, Kush, as well as Aditya, for spending the last hour with us, giving us all of your views and perspectives. Really, really appreciate, gentlemen. But with that, we are very close to India market close, at least on this Tuesday afternoon. You're seeing 0.5% higher on the Nifty 50. We're closing at a new high, of course, 425-ish. So 100 plus points higher. What's taken the Nifty higher? Let's pull up sectors first, if we may. And yeah, there you go. So you have auto, pharma, as well as consumption stocks, which have done very well. Realty doesn't contribute to the Nifty per se, but nonetheless 1% higher. So some of those pockets have done particularly well. What's done poorly? Nothing much actually to talk about. Far and few, energy and IT just about 0.1% lower. So nothing significant. So it's actually the gainers which are taking the markets higher. If we can pull up the advanced decline, and we'll see that it's a more balanced advanced decline ratio almost through the day. It stayed 1:1, nearly 1:1, and that's where we are closing in as well. Let's pull up the broader markets, because that's where some bit of underperformance is. Very little, but nonetheless we're up just about a quarter of a percent both on the mid cap as well as the small cap indices. Let's pull up the heat map, see a couple of stocks, focus in on them. We had a Maruti and M&M which has done very well. No surprises as to which stocks are leading the pack. It's auto as well as pharma and FMCG which are in focus. That's where most of the green currently lies at. But you'll also see some PSU and especially PSU Bank and SBI also, which had done particularly well through the day, is now settling around 1/3% or thereabouts higher at close. What's not done well, some of the heavyweights, Reliance not doing the best in trade today, but nothing significant. You have a Kotak and a Bajaj Finance also dragging the index a bit, but nothing significant per se, to be honest. Let's pull up the BSE 500, see the notable ones which are standing out. Well, Bombay Burma up 17% in trade, Blue Star also up 13%, Jubilant up 9%. So you have some real movers on the BSE 500. Phoenix Mills and Gland Pharma, and we've closed for the day as well. Phoenix Mills and Gland Pharma following suit, 7% higher is where they've closed at. Chambal Fertilizers under some bit of pressure, SIS, HFCL, it's a mixed bag. Raymond, after that stellar run that it's had over the last week or so, seeing a bit of cool off there, so maybe some profit booking happening there. And RVNL too, very similar, possibly some profit booking, 3.6% lower. But with that, completely out of time on India Market Close. From myself, Mahima, everyone who puts the show together, thanks so much for watching. Stay tuned, more on the other side. Stay tuned to NDTV Profit.